seeds is an integral part of the whole value chain. And if you look at the seed situations in Ghana, we are trying as much as possible to reduce the importation of seeds and to certify homegrown Ghanaian seeds.
My name is Daryl. Kwawu. Details coming up. And thanks for staying with us, everyone. First up, Standard Chartered PLC has announced plans to explore the sale of its wealth and retail banking business in Ghana. This is part of a broader strategy to focus on businesses and client segments where it enjoys greater scale and a stronger competitive advantage. According to a statement issued by the bank, the move forms part of the group's regular portfolio review process aimed at sharpening its focus on areas with the most differentiated client proposition. More in this report.
The bank stressed that the decision does not affect its corporate and investment banking operations in Ghana, which will continue to operate and support clients through Standard Chartered's international network, cross-border capabilities, and sector expertise. Any potential transaction, the bank said, remains subject to regulatory approvals. Chief Executive of Standard Chartered Bank Ghana and Head of Coverage, Jose Goji, said the retail banking business remains a strong franchise. He said Ghana remains central to Standard Chartered's international network, disclosing that the transaction is expected to take between 18 and 24 months subject to regulatory approval. Standard Chartered said it remains committed to Africa's growth agenda, noting that it has invested $300 million in technology and Africa-based ventures over the past 5 years and financed $5 billion in infrastructure projects across the continent in 2025 alone.
Well, joining me on Zoom to discuss this further, Nelson Kwawu, who is a financial analyst. Good afternoon to you, Nelson. So what does Standard Chartered's decision to explore the sale of its wealth and retail banking business signal about the attractiveness and profitability of retail banking in Ghana?
Well, thank you very much. Good afternoon, and thanks for having me. Well, the retail banking segment still remains a profitable venture within the Ghanaian economy, considering the fact that our economy is largely dominated by SMEs. And so the sector remains highly profitable. I mean, retail banking is basically about personal banking, consumer banking, and to some extent, SME banking. And that is the sector that dominates largely Ghana's economy. And so in terms of profitability, I would say the sector still remains profitable and attractive to banks within Ghana. In fact, if you look at the financial performance of Standard Chartered Bank as at the end of the first quarter of this year, their total income alone was about 462 million. Their profit before tax was about 170 million. Total asset of the bank is about 17.26 billion. Total deposit about 10.62 billion. And so clearly, Standard Chartered Bank is among the top 12 or the top 15 banks that we have in Ghana. So if they intend to divest, their retail department as a result of strategic reason, that doesn't challenge or question the profitability of the retail banking sector.
Yeah, how could this move affect existing customers, particularly depositors and also borrowers and wealth management clients during and after the transition period?
Well, I don't think this will affect them in any way because to the extent that a new, shareholder or a new buyer will be taking over that particular what we call strategic business unit, I don't think there will be any issue there. And don't forget that all these processes will be subject to the approval by the regulator, the Bank of Ghana, and so modalities will be put in place. And so depositors' money is safe. I mean, this is just a business unit of the bank which is not doing well. I'm sure as a result of interest rate differentials that they want to divest, and this will not in any way affect depositors or their wealth management customers.
And what opportunities does this present for potential buyers? What types of institutions are most likely to be interested in acquiring the business?
Well, I think this presents a fine opportunity for institutional investors, most especially the local ones. If you recall, of late there has been a discussion of, as it were, giving most of these investment opportunities to Ghanaians, either in the mining sector, in the petroleum sector, in the banking sector. And so the institutional investors locally present in Ghana may have that opportunity. Don't forget that as we are talking now, the total asset of pension funds, under management is well over 100 billion Ghana cedis. And if you look at the MPRA regulations, most of these fund managers are restricted in terms of where to place the funds. And so this presents a fine opportunity for pension funds who have ideal fund and who wants to expand their portfolios in terms of investment. And also, if you look at the insurance industry too, highly liquid, and if you look at the banking sector too, after the DDP program, most of the banks are now resilient, they are very strong, and most of them are having the liquidity to quickly move in and to acquire that retail banking unit. So institutional investors generally in Ghana present a very fine opportunity to take advantage of this divestment.
All right, and so Standard Chartered, we understand, is retaining its corporate and investment banking operations. How does this fit in broader trends among international banks operating in Africa and in Ghana specifically?
Well, unless we look at the contribution of the retail banking unit to the general profitability of the banks, as I did indicate, we cannot generalize it without actually looking at the numbers. And so once we have the numbers, we should be able to determine what is the contribution of the retail banking unit to the overall profitability. However, this is just a strategic decision taken by the bank. So I don't think this will open the gate or the floodgate for any other bank to say, hey, our retail banking sector is not doing well, so let's divest. No, I think this has to be looked at on case-by-case basis. The few international banks we have in Ghana, if you check their profitability and total asset position, I think they are doing very well, even beyond, what the local banks are doing. And so I don't think this will present any challenge or any floodgate for any international banks to also take a similar decision.
And what impact could this transaction have on competition in the banking sector, especially among banks targeting high net worth and retail customers?
All right, so that particular segment of the market is very deep. Already there is competition among the 23 commercial banks in Ghana in terms of customer retention, in terms of customer coverage. And so with the exit of one of the biggest banks from that sector, it will present an opportunity for a healthy competition for the rest of the banks. As I did indicate, our economy is largely, dominated by SMEs, and those who focus their attention there will rake in the needed the revenue. As for the wealth management aspect, we don't have so much in Ghana because most workers in Ghana are middle income, earners, and so that sector is a bit shaky. However, with regards to the retail banking sector, I think the opportunities exist, and that will present a healthy competition for the banks within that particular segment.
Thank you so much for your perspective to this story, Nelson Kwawu, financial analyst. Appreciate your time on the marketplace. Now, forget long queues and paperwork. The future of banking is happening on a smartphone or a smart screen, and Ghana is racing to catch up. This week, the country's financial regulators are in Malaysia, not just to study Islamic banking, but to dive deep into the engine the engine room of modern finance, fintech. From AI-powered lending to blockchain-based transactions, my colleague Anna Sabit tells us how these lessons could reshape the way Ghanaian banks could explore the potential of fintech.
Imagine a Ghana where you don't need to visit a bank branch to secure a loan and where financial services are tailored to your beliefs without the heavy fees. That vision is getting a major boost this week, not in Accra, but in Kuala Lumpur, where Ghana's financial gatekeepers have set up camp on a week-long training tour. On day 3, the agenda pivoted from theory to the tangible. We are talking about algorithms, the apps, and the artificial intelligence that are rendering the old queue and wait banking system obsolete. For Ghana, where mobile money is already king, this is the logical next step. Professor Dr. Akufo-Addo Saad, a prominent scholar and associate professor at the Institute of Islamic Banking and Finance here at the International Islamic University of Malaysia, says fintech isn't just a luxury for the developed world. It is the bridge that will help African markets leapfrog into prosperity.
There are a lot of statistics and research has been done to indicate how fintech is really powerful and very important for each and every community and economy. African community as well as any other community is in need of fintech to move faster. There is a research that showcased that young people from the age of 18 to 23, 25 are the ones that are not really interested into the conventional banking structure. What they want is that they want to open their own account, bank account, in the comfort of their homes, using their handphones without going to any branch. So, and if we look at Africa, we can see our population is made of a lot of these young people. So I believe it's a way forward, and it's a very good opportunity for African markets to prosper.
Professor Akufo-Addo urged the regulators to see fintech not as a threat, but as the ultimate enabler, allowing Ghanaians to access ethical non-interest products with just a swipe on their screens.
First of all, actually, fintech can really help in the financial inclusion. So those who are unbanked, they can easily be, bankable. And those who are, we can see even in Kenya, those elderly people in the far village, they can be able to use their own handphones to purchase and buy things. So that's the basic things that fintech can really do to a economy or society.
However, technology is only half the equation. Senior consultant Nofa Delizan Abdulrahman brought the focus back to the human element, pointing out a glaring gap in the West African banking experience. He spoke about how poor customer care is in the African banking industry.
Generally, banks in West Africa lack good customer service. Yeah, even the good brand names that is around the world who operates in West Africa, good customer service. So I think a little bit of better customer service goes a long way.
For Ghana, this just isn't a training tour. It is a roadmap for financial inclusion. And as these regulators prepare to take these insights home, the hope is that Ghana just doesn't adopt Malaysia's own. It goes home to build a better one for itself. From Kuala Lumpur for Joy News, and it's Anna Sabit reporting.
All right, you're watching The Marketplace. We are taking a short break. When we come back, we explore the risks to family businesses, the survival of family-owned businesses here in Ghana. Don't go anywhere.
As the sun rises over the city of Accra, its warm glow settles on one of the city's most thoughtfully planned communities, Lakeside Estate. And once again, something exceptional is unfolding. After the successful sale of our 4-bedroom Orca at Lakeside Hills, a new masterpiece is about to make its debut. An exquisite 4-bedroom story ochre home overlooking a breathtaking landscape of the Abri Mountains. This remarkable home now features a total floor area of 330 square meters, set on a generous 7,140 square foot plot.
Do you know that Ghana spends more than 8 billion Ghana cedis annually importing food that can be produced right here at home? That's why the Joy brands, in partnership with the Federation of Associations of Ghanaian Exporters (FAGE), are bringing you Joy Agribusiness Month 2026 under the theme From Soil to Sovereignty, Building Ghana's Agricultural Self-Reliance Through Innovation. Join us on the Joy Super Morning Show, Joy News, Joy Prime, and across Joy Business platforms for a month-long national conversation on Ghana's food security and agribusiness future. Since the beginning of June, we have engaged policymakers, industry leaders, researchers, agripreneurs, and development partners, exploring government policy, trade, and financing for food sovereignty, highlighting research, innovation, and mechanization. We have also examined infrastructure, value addition, youth participation, and agricultural financing as critical drivers of sector growth. In week 4, our focus turns to vast opportunities across Ghana's horticultural value chains. The final week looks at consumer power and Ghana's roadmap to food sovereignty by 2030. Stay tuned to Joy FM, Joy News, and Joy Prime. The Joy Agribusiness Month 2026 is proudly sponsored by Agro Monte Company Limited. We understand Agric and Ghana Commodity Exchange, trade, storage, financing, all in one place. That's GCX, powering Africa's commodity markets.
Hello, my name is Pamela from Customer Service. Please revalidate your account by texting your Ghana card number to 0500,000 247.
Hey, Abili, wabadim.
Madam, give me the numbers behind your ATM card. I'm calling from the head office.
An email was delivered across to our customers this morning.
Confirm if this is your bank account 100,100,100.
Thanks for sending your bank card details.
Send the OTP now to avoid cancellation.
EcoBank will never call, email, send an SMS asking for your PIN, OTP, bank card, or Ghana card details.
Don't get played. EcoBank, the Pan-African Bank.
Hello, please, I'm calling from Customer Experience Center.
Welcome back to the marketplace. Now, acting ESG advisory lead for Africa, the International Finance Corporation, Moise Meoui, has raised concerns over the high failure rate of family-owned businesses during succession, warning that weak governance and poorly structured transitions continue to undermine business continuity across generations. He spoke to Joy Business on the sidelines of ESG Roundtable for Development Partners in Accra.
The International Finance Corporation is calling for stronger succession planning among family-owned businesses to ensure their long-term survival and sustainability. Speaking at the ESG Roundtable for Development Partners, acting ESG advisory lead for Africa at the IFC, Moez Miao, warned that many family businesses fail during leadership transitions because succession planning is often treated as a transfer of ownership rather than a comprehensive governance process.
The fact that the successors are not prepared enough, are not well prepared, not well educated, don't have the capabilities, don't have the knowledge about the business, not the background. They might have the right background, but they don't know the business very well. They are not ready. They haven't been prepared by the family, by the business, by the current leaders. And then the other challenge on the other hand is leaders who are not ready to let go, because their identity and the business are one and the same, and they cannot separate both. It's very challenging for them to let go. The objective is to share some of the good practices that the top performing family businesses have implemented and that turned out to be very successful to manage succession events in terms of having the right governance mechanisms in place, not only within the family, such as a family constitution, family rules, a family council for the family to have a platform to discuss and agree on events that are important to them, but also the right governance structures within the business with independent views, independent perspectives to help the family take the right decisions and to help drive the business.
Also speaking at the event, Senior Country Officer at the IFC, Yewande Giwa, highlighted the significant contribution of family-owned businesses to employment creation and economic development in Ghana.
About 90% of jobs in Africa are from the private sector. So for us, we think family businesses are special. They're special because when it comes to our focus areas in Ghana, such as growth and more and better jobs, these are not topics that are difficult to explain to family businesses. The reason is because when you're a family business, you don't just think about your bottom line. You're thinking about, how do I influence my community? How do I make a difference? How do I create more jobs for my immediate family, extended, and beyond? When you explain things like, how do I influence growth in Ghana? These aren't difficult topics for family businesses. So for us as IFC, family governance is very important because we want to see longevity and succession.
The roundtable brought together key institutions active in Ghana's environmental, social, and governance ecosystem.
Now, Ghana is taking a significant step towards reducing its dependence on imported seeds with the inauguration of the National Seed Council, a body tasked with strengthening local seed production and improving access to quality planting materials to drive agricultural growth and food security.
The Ministry of Food and Agriculture has inaugurated the National Seed Council as part of efforts to strengthen Ghana's agricultural sector and improve access to quality planting materials for farmers across the country. The council is expected to provide strategic direction for the development, regulation and promotion of the country's seed industry to boost agricultural productivity and food security. Speaking at the inauguration ceremony, Deputy Minister for Food and Agriculture John Dumelu underscored the need for Ghana to reduce its reliance on imported seed and promote the production and use of locally developed seed varieties.
Seeds is an integral part of the whole value chain. And if you look at the seed situations in Ghana, we are trying as much as possible to reduce the importation of seeds and to certify homegrown Ghanaian seeds.
He further charged members of the council to accelerate the review and approval of seed applications to help promote homegrown seed varieties and improving farmers' access to quality planting materials.
As we inaugurate you today, we would ask you to also expedite those seed applications that come so that it becomes easier for homegrown Ghanaian companies, seed manufacturing companies, to be able to get the certification they need so that the seeds come onto the market. As you know, the world is changing, and so some seeds have to be modified to, resist drought and diseases and so on and so forth. And so that is where you come in. So in as much as we are distributing fertilizer, we are building farm service centers, we are doing all these things. The seeds is very important. With the right seeds, I think Ghana can move forward in the right direction.
Meanwhile, Board Chair of the National Seed Council, Alhaji Abubakar Mumuni, indicated that the body is committed to collaborating closely with the Council for Scientific and Industrial Research to ensure the development and distribution of improved seed varieties suitable for Ghana's agricultural needs.
We've realized that over time now, there has been some infiltrations in some of these seeds, and to break it, we need to work in collaboration with the Council for Scientific and Industrial Research, because they get us the foundation seeds, and then we leverage on that to satisfy seed, so that we are able to get the right seed for this country.
The inauguration of the National Seed Council is expected to boost local seed production, improve farmers' access to quality planting materials, and support Ghana's drive towards food security and sustainable agricultural growth.
And we have more agri stories on our website, myjoyonline.com/business. We have a page dedicated to agribusiness, and we have stories including TCDA clarifies cashew farm weight pricing, the bank's claims of 25 Ghana cedis per, I think per kilo maybe, and cocoa board indebtedness to suppliers. Part of broader cocoa sector, ginger prices to remain high for 2 years, according to experts. Also, innovation branding is critical for success in agriculture, according to Dojina Kumsin. That's all from our Agribusiness Month conversation. myjoyonline.com/business, leaving you with the day's latest international stories.
When you get on any drug, it can give you some amazing energy and some creative geniuses that just boost you like this.
Anytime that anyone uses any of these drugs or substances of abuse, the brain itself gets affected.
Creatives, their brain never rests. They are inquisitive. They want to unfold or uncover, release things that somebody will be like, wow, how did he get to that frequency?
And when they stand on stage, they mesmerize us. At got to a point in time, I left my comfort zone, my abode, and I came to Medina Ghetto, and I fraternized with rocks and wolves. I became a night